And welcome to another episode of This Week in Real Estate. I'm Ray. Say hi, Dan.
Hi, Dan.
And we are the Bearded Men of Real Estate. Thanks so much for everyone for joining us. We had a last minute edition. Thank you, Andy in Clubhouse, for sending us a little tip. We have a lot of news today. Basically, we're going to be talking about is if what is going on in housing an actual slowdown or crash, or is it just a normal seasonal slowdown? So we'll talk more about this. We have home price growth finally decelerating. Housing inventory is still low, though. So you have low inventory, but prices are going down. Or are they going down, or is growth just decelerating? Then we have foreclosures. They're up 68%. So this is surely a sign of the end times for real estate. Has been a drop in mortgage rates, and obviously not a drop in purchases, right? There's only been a drop in refis. All cash transactions are now under additional scrutiny from the Biden administration. Zillow finally moves half of its iBuyer homes that said it was selling. We have 2 articles on that. And then Better Homes CEO, or not Better Homes, sorry, different company. Better CEO lays off 15% of the workforce with the Zoom call. That's rather uncomfortable. We have one of the participants who recorded the Zoom call. We can show that to you. I'm not going to show all of it
what
to
you're
you.
saying
There's a lot of
is
adult language after the CEO laid the guy off.
So what you're saying is it wasn't better.
Probably was not a better way to lay people off.
It wasn't the best way to lay people off.
And the last thing we're going to talk about, if we have time to get to it, it's an article I told Dan. I was like, man, do we really have to cover it? But we do have to cover it because we predicted it would happen. And we always love to cover our own predictions. Is the Bible hate speech? NAR hate speech provision faces its first big test. So basically, there's a pastor realtor that pulled out of supporting something that kind of went against what his church body did. And then an anonymous tipper tipped off the board or whatever. And now he's being brought up as someone that has committed hate speech, which means he could lose his NAR affiliation. He can still be a real estate agent. So real estate, he just can't do it with a professional organization of the National Association of Realtors if this goes through. So we'll talk about some of the details on that. Kind of a weird situation. I don't think it's the ideal situation to test this, and we'll talk about why more later. But it's just,
I mean, if you're going to come out of the box though, testing this, why not just go all in? You know what I mean?
It's more of a light test of it. So we'll see what happens. Pete Thorpe joins us on Facebook. He says seasonal 68% up though is easy when you don't allow them for Lord knows how long. Well, maybe. Pete, strong comments today, Pete. Better about as good as Zillow iBuyer fails. Good hashtag usage. So if you guys are joining us on Facebook, you can comment just like Pete did. We broadcast Facebook on our page. We get 0 organic reach now on Facebook. They are only a pay-to-play program. Nice. And with all the money we make for the show, we put it directly into Facebook, which is $0. So if you want to see growth of the show and us to continue to do the show, we ask that you please share it. You can also find us on YouTube, which we'd love for you to do. We have a YouTube channel there called This Week in Real Estate. You can watch the show there and comment on YouTube, which we don't have any YouTube comments yet. Normally we do. We really appreciate that. We appreciate the participation. And finally, we're broadcasting on Clubhouse as we speak. So we're live in Clubhouse in the Real Estate Networking Club. Just search for Real Estate Networking Club, or you can search for Ray Allen or Dan Ludwig, and you will find us live broadcasting right now. And you could join the show. You can raise your hand and say, ooh, I have a comment to make about that topic
right now.
And you can comment out loud, and you will actually join the podcast. Whatever you say will be on the podcast. So we really appreciate that. Hey, look at there. Ellis Home Inspections. Patrick Ellis says, first comment. Yes, he's coming through on YouTube. Thanks, Ben. Andy Rose, you're already commenting on the article that you sent me. You're going to have to wait because so that's going to be the 3rd article we cover. So I'm going to hold your comments. It's a good comment, but I'm going to hold it until we get to that article.
And Dan, I do have to mention, we've been trying for 4 years to get our organic reach on Facebook down to 0. And finally
succeeded.
We've finally done it. So thank you.
I mean, so used to Facebook was a great application. Like you could post something on your Facebook page, like on a Facebook business page.
Unsponsored, unpaid for.
Unsponsored. They would put it in front of people. They would test it out. They would see, is it more for this person or that person? It would get lots of organic reach. And then, so we were like, oh, guys, this is awesome. please follow our page, because we assume that if you followed someone's page, whenever that page posted, you would get alerted of those posts. No, that is not the case. Just because you follow a page, you don't get an increase in alerts from the page. It's just occasionally you might see one. So it's kind of a weird situation over there. And now they're going
over
before
there.
the courts. So anytime, and I just heard on CNBC on the Tech Check program that there's all kinds of C-level executives emptying out over there. So who knows what's happening at Meta? Instagram is also going before, talking about how Instagram is bad for kids. That's what the government's telling Instagram. So Instagram has been a pretty good little platform for us, but it's like for the re-promotion of this broadcast. It's not even for the promotion of the broadcast live normally. So I don't know. It's weird. I think the best way to find us is probably Clubhouse or YouTube.
The actual podcast is very helpful too, if you want to go listen.
Oh, yeah. We actually do have a podcast. And if you're tired of listening to all this stuff, I should mention, you could go to YouTube, and in the comments of YouTube, there's clickable timestamps. Just click on one of those timestamps. You'll zoom to the part of the show that you want to get to. So if you're like, ooh, when is he going to talk about cash deals under additional scrutiny from the Biden administration? It's down there in the timestamps. It's not right now as I'm saying this live, because that would be crazy. That would be in the future. We're good. We're not that good.
Not that good. You're stuck with the banter. If you're anti-banter, you're stuck with the banter right now.
Don't watch the live show. I will say, though, that we put those same timestamps in the podcast. So if you're downloading the podcast and you just heard something, you're like, oh, when are they going to get to that? You can just look in the notes of that podcast and you'll see the timestamp, and then you can use your thumb to scroll over there. So that's also an option. We'd love it if you do listen to the podcast, so please rate it, because that's how other people will find out about us.
Oh, and can I say, I just want to say a quick thanks. Over the last couple of weeks, for some reason, I don't know if the podcast is getting more reach or if that number 16 news related podcast in Taiwan. Is it Taiwan?
Yeah, Taiwan.
I don't know if that's finally helping us, but over the last few weeks, I've had a lot of people reach out and say, hey, I've been listening to the podcast and I download it and all that stuff. I just want to say thanks. That's really awesome. That's kind of why we started this whole thing. So thank you for that. And make sure to rate us on there and review us on there. It really helps. And make sure you're subscribing and downloading. It's really awesome. So thanks for that, because that's cool. That's kind of, you don't get to likes and views and all that stuff on it. So you got to see the numbers later. So it's really awesome when they come in like that. So thank you.
Yeah, we really, really appreciate it. I should say, Justin Conoco told me to share our show in his group. So while you're telling everyone more about why we do this show, I'm going to go ahead and share our show on Facebook.
The place we just said where you get no organic.
Yeah. I mean, he said, "Hey, Ray, put it in my group." So I'm gonna do that. I'm gonna put it in his group.
Put it in his group. I got a new follower on Instagram. Thank you. It's at D Ludwig Rocks. Everywhere good D Ludwig Rocks are sold. It doesn't work. So anyway, when Ray and I met here on the interwebs 5 years ago, we're just rounding up. I think it's 5 years, maybe longer. It might be 6 years now. It's been a long time. We've known each other a long time. I had an idea for a show because I'm in fact a bearded man of real estate. Yeah. And when I met Ray, I noticed something very interesting about him.
What's that, Daniel?
He actually knows Tom Ferry in person. I mean,
that is true, but you knew that one was true.
I knew that one was true. I just thought that your last week was pretty cool. I'm not a big fan of influencers per se, but real estate influencers are a little different, and you were in great company. And I just thought that was so cool. I just thought it was so awesome.
Yeah, it was it was a treat for sure. I feel like I snuck in the back door on that thing because there were so many heavy hitters in that group, but we had a good time. What Dan is referring to is at the end of last week, I got to spend 2 days with some of the biggest real estate influencers in the business. I mean, I would say like video influencers, but they're just influencers in general.
And then they happen to sell real estate.
Yeah. To sell real estate. Talked a little bit about my little podcast to them and got some tips and tricks and stuff like that. But we just learned and we dove into each other's business, and it was fun. It was a really cool couple of days. Tom Ferry is the one that hosted it and kind of brought all of us together. So I think you're going to be seeing a lot more content come from that little get together. That was fun. That was cool.
Yeah, it was just really cool. And it just seemed like, what was it? 20 of you about?
Yeah. Yeah, it was about 20 of us. And then there was Tom Staff, who's amazing at what they do. Like they're experts in their own right. So one of my treats was getting just to visit with Tom's staff and be like, how do y'all have a volume of content, right? We produce a lot of content. So you have a volume of content. How do you organize it? How do you distribute it? So
Yeah.
it was just really good conversation trying to figure out stuff.
When
moving
you go
forward.
to just the amount of content they have to put together for the yearly Tom Ferry get together. I mean, that's insane. Just the amount. So it's pretty cool. Sorry, my cat really wants more screen time today.
Yeah, your cat was.
But
all
anyway,
over
I
it.
just thought that was really cool. So I wanted to kind of bring that up because it was really awesome. And Ray's just awesome with all of his content. And for some reason, Tim was there. Hashtag whiteboxing was there. I didn't understand that one, but
yeah, we joked. We were like, Tim, maybe one day you'll start doing video after coming to this group.
right. He's only been doing video
He
for
hasn't done it.
25
been doing
years
it forever, but he hasn't done a lot recently.
But anyway, obviously, I noticed that he's a beautifully bearded man. But what I also noticed is he loves giving value up front to not only his clients, but just to humans in general. So the show's about being more as an agent, but also being more as a human.
And one of the ways we believe in being more is to know what in the world is going on, because a lot of your clients are going to rely on you with their largest real estate investment. And when they do, if you don't know what's happening, if you don't know that we're at record low inventory and yet prices are starting to decelerate and why, if you don't know that there's, 300 properties maybe in your area coming on the market from Zillow's iBuyer program trying to offload it, or that they sold it to a corporate investor who may not be buying many more homes in your area or may buy a whole lot. If you don't know these things, then how can you advise your clients on what they should do with sometimes what their largest investment is? So thank you guys for joining us. We wanted to give you just one place where you could come for about an hour, get a rundown of the news. Then you could kind of use it throughout the week, and you don't have to come back to it unless you want to. I mean, you could subscribe to the channel and hit the bell, and you'll be notified whenever we do these little chops, which are just small versions of the articles that we talk about. So thanks for joining.
Appreciate it.
And we also are going to be adding some people to our show. It may be, I got to look at like the holiday dates, but next week might be our last show before the Christmas break. So we'll take a look at that to make sure. Yeah. So we'll probably have an extravaganza next week with several guests on our show. A lot of people that contribute to us, we're going to reach out to them and see if they can join us on video. And so you guys will be hearing them differently, especially those Clubhouse guys. All you hear is their audio. So I think it'd be fun for people to see their face.
I know it's time to get LaMarche on here. So LaMarche, if you're listening or watching, I'm calling you, man. I'm going to get you on here because people need to see your face and see, the kind of stuff you say to us about go dogs and all that stuff.
It sounds terrible when you say it, honestly, but
dogs. I'm literally extremely Californian. I can't. Is it dogs? I don't know. I have no idea.
Dog. Yeah. That was way better. No, when you said it, it almost sounded northern. Dogs. Yeah. Terrible. All right. Well, I've got one more place. So let's see. The Real Estate Networking Club has a little mod group. And I'm gonna let them know about our little club right now. All right. Ready to get into the show?
Absolutely.
All right, let's do it. All right, there's the mark for that.
If you guys don't know what that is, then you need to watch Wayne's World.
Wayne's World. Yeah, we were trying to come up with a transition years ago when we were first doing the show. And we were like, oh, what are we going to do for a transition? Well, until we have a professional transition, let's just do this. 172 shows later. All right. So let's talk about home price growth. It's been a hot topic lately. And we're
this comes hot off of our prediction from last week, right?
Yeah, I would say so. Home price growth is finally decelerating, and that's just the start. So this article comes to us from Fortune, obviously from the pop-ups. Exhausted, frustrated, stressed, stretched. Those are all reasonable emotions for home shoppers to be feeling right now. After all, home prices rose faster this year than any period in tabulated U.S. history. That's kind of a cool stat. Home prices, I mean, this would be good just to put on your Instagram stories. Home prices rose faster this year than any period in history. Between August 2020 and August 2021, home prices notched a 19.8% gain, the largest uptick on record, and well above the 12-month peak, 14.1%, led up to the 2008 crash. Let's see, there's the allusion to, is this going to happen in the future?
Right. So
So
we're
here's
going to start seeing, and then another story.
Yeah.
I think you put it in the third story. So now we're going to, I'll
Yeah.
wait until you get to that one, but now we're going to start
Yeah.
seeing the headlines shift towards,
Yeah.
is a crash coming? Is a whatever.
And the lead up to the crash.
Right.
But there's a bit of good news for home buyers. The latest reading of the S&P CoreLogic Case-Shiller Index, leading measure of residential real estate prices, finds that year over year, U.S. home prices rose 19.5% between September 2021. That's a slight 0.3% dip. Marks the first deceleration. We talked a little bit about this last week, but I always love to bring it up because one of the things that we told everyone to be looking for is the headlines that say home price gains slow, right?
Yep.
So we talked about that and really kind of dove in and rubbed everyone's nose in it last week. Well, here's a follow-up article. What we did. I mean, we were dead on, right?
Can I read? I want to read something before you get into the never been lower.
Oh, yeah. All right. Let me bring this up.
Just from that same article. And then also I want to hear, if you're on Clubhouse, Facebook, YouTube, whatever it is, what's your inventory at right now? Because I hadn't searched. I usually do just my city, but I'll get it to in a second. But I was kind of shocked. This story made me go, oh, dude, I need to look. And I hadn't looked. But for the home price growth is finally decelerating, which is a funny headline. If the economic models produced by the Mortgage Bankers Association, CoreLogic, and Redfin come to fruition, it would give buyers some breathing room, right? That would be true on the price front. However, the overall cost could be the same. So this is kind of when you get the buyer reaching out like, well, should I wait for prices to come down? Sure, maybe, but then interest rates go up and it kind of evens everything out. That's why you really have to have your lender work with your buyer and say, here's what it's at right now. Here's what your cost is right now. If home prices drop 2%, but interest rates go up this much, then here's your cost, what your monthly mortgage would be. So you really need to be reaching out to your lenders and have them run those numbers on them.
And it's really not like home prices are going down. Home prices are just going up less.
Right. So waiting. So they go up less, but then interest rates go up, although, well, we'll get to it in a second, but so it's really not a time to wait. It's just not, but make sure that your lender's running those numbers so your buyers are fully aware. And then it goes on to say the reason these three models are more bearish on prices is because they believe that mortgage rates will rise fairly quickly next year. Redfin predicts the current 30-year average fixed mortgage rate will climb from 3.1 to 3.6 by the end of 2022. While the MBA, Mortgage Bankers Association, forecasts 4%. That's bold right there. At that increased mortgage rate, the price savings, that is not growing by the 13.6 rate predicted by Zillow, would essentially get wiped out by added interest to the loan. So I thought that was really important stuff there. So there's a lot of buyers still on the fence. Should I wait? Should I wait? Or I'm waiting to get this handled or family matters or whatever it is. Make sure you're getting them this information so they understand the full picture of what's actually going on. But in regards to those predictions, we will next week. I think we're doing it next week, but next week we will check. We did predictions last year of what we all think mortgage rates will be at. We will check on those to see how we did, and then we will make new predictions for next year.
That's right. Well, I think we're the only show that actually goes back and looks at previous predictions to show how accurate
we actually check our work. We actually go back and check to see if we were right or not.
All right. So this could be worrisome, right? Because we know that when home prices are decelerating, right? So they're going up less fast. All right. Well, maybe that's because you have an increase. Up less fast?
They're going up less fast.
That's right. So whenever stuff like that happens, you see a slowdown, you could say, or a market cooling or a freeze, as I put in the thumbnail. That is obviously a sign that you have more inventory, right, Dan?
Obviously.
Dan, you're wrong. Oh. It is. Here's an article from Housing Wire. Oh, I did. Here's an article from Housing Wire. It says housing inventory has never been lower. 1/3 of homes sold in under a week. Okay.
That's not new. That part's not new.
Housing inventory in America is at a crisis level. So, Dan, doesn't that mean that home prices should be at an all-time high and continuing to rise? Is this the sign of a market crash?
Yes.
The number of active listings hit an all-time low during the week ending November 28th, according to Redfin report published on Wednesday. During the 4-week period ending in November 28th, the number of active lists was a 23% decrease compared to the same time in 2020 and a 42% drop compared to 2019. The number
Dude,
of
that
new
seems
listings
horrible,
was
right?
also down. Do what?
That seems horrible, right? But then this is where I want you,
Yep.
I want us to focus because I don't understand this last sentence. Everything is down and low and 42% and all this stuff. But then there's this last sentence I don't understand.
The number of new listings was also down compared to 2020, dropping 4%. Is that the it's all still down, right, Dan?
But
But it was 12% higher than the number of new listings during this period in 2019.
wait, so but that everything's down 40%, 60, whatever,
Yeah.
30%, but
Yeah.
higher than 2 years
The
ago.
What's the number of new listings?
But that's the future, right? Isn't that good?
All right. So here's a quote from
And also,
Daryl
what do they
Fairweather.
consider new? The last 7 days?
Usually it's like the last 7 days or the last 2 weeks normally.
But
And
everything is selling in a week or week and a half. So
yeah. So the number of new homes, this is a quote from Daryl Fairweather, Redfin chief economist. He said this in a statement. The number of homes for sale typically declines another 15% in December. That means that by the end of the year, there will be likely 100,000 fewer homes for sale than there were in February when the housing market supply last hit rock bottom. I think more new listings will hit the market in the new year, but will also be a long line of buyers who are queuing up right now. And that is queuing up, not queuing up. Just somebody else. Never mind. Here's another quote. I always like it when they talk about the headlines. Headlines and new restrictions related to the new variant. I don't want to say the word because we don't want to get banned. It might fuel some uncertainty and volatility in the economy. In the short term, global interest rates, including mortgage rates, could fall. It is extremely tight housing market would likely see a proportional increase in competition and home prices. So they're thinking that home prices will continue to increase and that demand will decrease due to a rate increase. I know we're saving some predictions, but in my opinion, I think as that rate starts to approach 4%, you're going to have so many buyers jump on the bandwagon and be like, hey, we got to buy now before it gets over 4. It just seems like that's the mindset of a lot of folks. So I'm interested to see if that's actually going to happen. The inventory, though, being down so much, we know that housing starts were up. They went down again, I think, in September, but they were up last time we talked about them. So, we said last time builders just need to build, and help get us out of this because it's not.
well,
I mean, that's part
good
of the
news
part of the
that
issue.
they're what did they call it? The builder confidence. Good thing it's up.
Yeah.
It's a silly stat, but hey, at least it's up, I guess.
And for the real estate agents, this is a little bit off topic, but just thought I'd throw this tip out there because we'll do a tip every now and then. I was talking to a builder yesterday, and he said, I said, hey, are you working with real estate agents right now, just trying to sell this stuff yourself? He's like, I'm just selling it myself. I was like, oh, okay. He was like, look, man, I can build a doghouse and it will sell right now. And I said, yeah, you can. I mean, houses sell themselves. And he said, yeah. I said, but do houses maximize the rate of return you could get themselves?
No.
He was like, what?
They don't.
Like,
They don't do that to themselves.
Could you have sold that doghouse for a lot more if it was represented by an agent? He said, well, I don't know. I was like, well, that's what I'm here to answer for you.
Right.
He was like, all right, man, I'll give you a call. So, I mean, that's just as you're talking with builders and they're saying, well, we can do it all ourselves. We don't need any representation right now because it's the strongest sellers market ever. Just keep some of that stuff in mind. They may be able to sell it themselves, but can they really maximize what they would have made themselves? And there's a good chance they can't.
Yeah. For us here, again, I usually do my city, Rancho Cucamonga, California. We have 17 days of inventory. So when I read this, I was like,
wow.
oh, I haven't checked. And remember, I don't know. It seemed like we were hitting it every week or every other week of where inventory is at because it was insanely low, blah, blah, blah. But it was going up towards a month. I don't know if it ever creeped up over a month, you know, and I will look when I look for buyers and stuff, I'm looking in an area, not just one city, but 17 days is pretty insane. You know, we're still closing at a similar rate we have been for the last year and a half, 4 a day, but 4.1 a day. But yeah, to have only 17 days in inventory was a little bit of a shock. And then Pete has a good comment. And then did you want to hit anyone on Clubhouse? It looks like Matt unmuted. If he's going to stay away from the dogs stuff, then that would be fine.
All right. So Pete Thorpe said insanely low in 2 of my towns. There are a total of 8 houses for sale right now, 2 of which were well over 1 million. So there's realistically 6 houses available. Then he says, "Oh, and then, sorry, one just went. There's 7 now with 1.3 million and 3.55 million. So really, there's only 5."
And he works did he say in 2 of his towns?
2 of his towns.
So
yeah,
he works a pretty big area.
Let's go to Clubhouse. If Matt's available, we'll get what's happening in the hot Atlanta market. Matt, are you there? It's a big risk just going to him like that. Just calling his name. He's probably trying to find, how do I get back to it? Or Matt's not there. So anyone, is anyone in Clubhouse want to comment about what they're seeing in inventory? Are you seeing a decrease in inventory and also a slowing of home prices? If you want to comment on that, just flash and we'll come to you. I see Nico just joined. Oh, there's Jan. Hey, buddy, what's up?
Jan, he's here in SoCal, right?
Hi, Ray. Hi, Dan. Hi, everybody. Hi. Good morning. How are you doing?
Good, man. So what's up with your market lately? What's going on? Are you seeing a slowdown in home prices and a decrease in inventory, or are prices still going up like crazy?
I like what Dan was sort of qualifying the question. It's funny how people say yeah, prices are going down and things are slowing down, but it's not what I'm seeing. It's even listings that I would think they would not go, they're going over asking. And so I think it's true that inventory, of course, is less. I see that. But then the new listings is also increasing. But one factor that people tend to miss, and that's the variable that is causing this confusion, to me, is what Dan was indirectly referring to, is the fact that homes are selling so fast. In a normal market, a house would come on the market, it would stay on the market for a month, and then it will go in contract. So you would have a good 2 months or so of a house being on the market or coming back and stuff like that. Now we have a house goes on the market before even an open house goes to escrow, or has one open house barely and gets tons of offers and then goes to escrow. So basically it's true that the inventory is less, but one of the main reasons is because of the absorption rate is very fast. And then the sellers, its inventory is it shows it's less, but it's actually just a fast absorption. It's just comes and goes. And then another factor is I think the quality of inventory has improved in the fact that sellers that normally do not consider selling, I do cover West LA or areas, posh areas where sometimes my clients want a front facing, not a corridor facing top penthouse or unit, and that wasn't something they could find no matter how hard they would look. But now it comes on the market, it gets tons of offers for sure, but then the quality of inventory has improved, and that's something I don't see people talk about. Is there are less homes because they go fast, but then there are better, more desirable homes coming because sellers know they can cash out and enjoy the top dollar. So that's my 2 cents.
That's interesting. Thanks for throwing that in there, Jan. I see Nico, man. I see you flashing your mic. What's up in your market? You were talking about a buyer's market before anybody. So what's going on now, man?
Well, can you guys hear me on the audio, or do I need to go on my cell phone off the speaker?
No, you're good.
Okay, cool. So this is just personal experience. So 2 of my clients just recently were they were the only offer. I'm currently run right now with a VA loan. The agent called me, she goes, "Yes, you're the only offer right now, but your client needs to put money down." I'm like, "It's a VA loan." "Yeah, you guys got to put money down." I'm like, "No problem." We put money down. So I'm like, "Hey, what's the offer? I mean, what's your 2 cents?" She goes, "Well, we want to see the rest of the week on how many more offers we can get." I'm like, "Do you have any other offers?" "No, but we'll probably get more offers." Now, this is the exact same thing that happened with another house with a different client. And my clients, no one's sticking around. Or at least if you're smart, you're not sticking around. You're putting multiple offers in different houses at one given time. And agents are trying to get into these highest and best multiple offer situations, and it's not there. And they're hurting their own client because they're not getting that's higher offer or better offer or $20,000 over asking offer. And we're finding that more and more. I just put a house on the market last week. We had 4 people at the open house, and I marketed. We had the house appraised right before we went to market. I marketed it at $7,000 under market value, and we only had about 4 people at the open house. So our market, it's still like that, but our absorption rate is pretty fast. It's still, our stuff is not sticking on the market long, but our offers are not getting, you're not getting a lot
Huh.
over asking.
That's really interesting. Yeah, the broke agent posted, I think it was yesterday, that it was like the disappointed Justin Timberlake face, and it said, "When you get a counter a week after submitting your offer." Like, yeah, okay. You waited too long to accept this offer. People are going to move on.
Well, there was
All right,
so
Aaron.
much of that. There was so much of that in LA specifically, and they would say, "Hey,
Yeah.
we're not presenting offers until whatever." So usually they'd, put it active at the kind of earlier part of the week, and then let it go through the weekend, and then we want to let everyone see it. We'll see if anyone else needs, So they put in there. LA specifically is very, for the most part, very good about saying, "Hey, we're presenting offers this date." We always try to do the same thing on our team as well. But it was like, if you submit an offer, okay, I'm going to wait, another 7 days to get a counter or whatever the case is.
Yeah.
But my clients are still going to be looking at other houses. Like, we're not just going to wait around for this one.
Yeah.
So there were multiple instances where it's like, "Hey, we're going to send you a counter." I'm like, "Dude, we're already in escrow. Like, we, it's great that you did that. Thank you for letting us know when offers are due." But
Yeah.
so I'm really curious to see in these types of markets where they're kind of, if they don't adjust, they're going to be like, "Okay, you can't do the same status quo. You're going to have to adjust," kind of like what Jan was saying. You're going to have to adjust. So you get a good offer, you got to start negotiating with it.
Yeah, I agree.
And
Aaron
to
West,
that
I saw you
point,
pop up here. Oh,
sorry.
go ahead. Go ahead, Jan.
Yeah, just I have an interesting, sorry, Aaron. I just wanted to share my interesting experience with you guys. I had an offer like in city of Sherman Oaks, which is kind of in San Fernando Valley, and these guys have just done a price reduction. It's been on the market for a month, and they reduced the price. We came in a strong, like at the reduced price, all cash. And these the sellers and their agent, because the same concept that Nico was saying, like they are hoping for a multiple offer. They're hoping for that offer way over asking. They're just losing this offer, and my buyers are frustrated. They say, "Let's move on." And so I think there's truth to that. And those sellers or those agents that don't take it too hard, or they don't look at it seriously, they're going to cost their clients, or the sellers will going to lose money by not really adjusting to changes.
Yeah.
So that's what I wanted to share.
Yeah, which is, one of the reasons we do the show is so that you guys can be professional and kind of, what changes are coming, what the market's doing, you could advise your clients accordingly. So speaking of which, the great Aaron West joined the show. Aaron, what's happening in your market, man? Where did he go? He's probably like trying to get back. They're trying to get back. Oh, Julie Moon just joined too. What's up, Julie? Aaron, are you there yet? All right, we'll get Aaron when he comes back. Matt
Side note,
Marsh.
Matt
What?
wants us
What's
to
up?
start over.
Oh, yeah. He said, "Hey, sorry I'm late. What I missed, start over."
All right.
All right. Hey, everybody, and welcome to another episode. I mean, if Matt says it, you got to do it, right? You got to do it. All right, Aaron, flash your mic when you're ready, and we can just add it to the comment. Oh, you know what? His app probably just crashed because he exited suddenly. All right. Anyone else want to comment about what's going on in your marketplace? Andy, even though you're a gator in enemy territory, what's happening where you are, man?
Yeah, I just pulled up for Metro Atlanta, and it looks like Metro Atlanta, we're down just 2% year over year. So last December, we had roughly 4,100 houses on the market. Right now, we're at 6,100. So not doing too bad compared to last year, but it says we're down 2%, but hey, things are flying off the shelf for the most part. We had a hiccup back in like, I don't know, September, October, where inventory was sitting a little bit longer, but once October, November hit, it really picked back up again.
Yeah, interesting. I mean, we're seeing the cute homes are still going really quickly. I think Jan was talking about the good inventory is still going really fast. So that's what we're seeing. But we also see some homes that are hitting a little bit because the sellers got a little greedy. They're hitting the market price a little bit high, and they're not moving as fast as you would think. So that creates opportunity for a lot of our agents too, and to get their clients into a home that they normally wouldn't be able to get them into. So, Julie, I saw you flash your mic. What's up?
Hey guys, sorry I'm late. I just did a search for all. So our area pretty much encompasses three counties. We're not a huge area, but I was searching 4-bedroom houses for a client. There were 5 houses that showed up.
Wow.
In all of our two county area, and it was a very wide price range. It's like the slimmest I've ever seen, even at this time of year, and we have tons and tons. It is just really, it feels like a little panicky lack of inventory in Athens, Georgia right now.
Interesting. That goes in line with what the article said. Housing inventory has never been lower. It's expected to go even shorter on into February. What is that doing to home prices, Julie? Are they still crazy high, or are you starting to see some softening in those home prices?
We are seeing no softening at all, and everything is sky high, and it feels like I went on a listing appointment for a great house in a great area yesterday, and I mentioned it to a couple people as I was kind of just getting their feedback, and the agents, it felt like I had raw meat in front of like lions or something. It was like all they could do to not beg to get into a property.
Oh, man.
It felt like panicky, like apocalypse or something. It was very strange, but the prices are still exorbitantly high, and tons and tons of offers and lots over asking, and no contingencies on anything.
So what are your clients going to do, Julie, after they buy and suddenly their home is worth half of what it once was because their neighbor foreclosed? Isn't that how it works according to Susie Orman?
Yep, that's what's going to happen.
I literally have people asking me that. Like, what am I going to do? I don't want to overpay. I'm like, that's fine. But remember, this house you liked 2 years ago when you weren't ready to pull the trigger is now twice as much. Okay, sorry. I can't help you anymore.
I can't help you anymore, quote unquote. I want to go to some of the comments too. Dusty Martin, she's checking in from Scottsdale. She says that the inventory is down 47% over last year, but sales are down 12% or less. And the price per foot is up 30%. So they're not seeing any softening in Scottsdale. Days on market is low too, she said. Patrick Ellis, Ellis Home Inspection, says, this makes sense to me. In the summer months, every Monday, my phone would blow up with inspection requests. Now, Wednesday is when the majority of calls come in. Oh, interesting, because it's taking people longer to negotiate and go under contract. Huh. Dusty says she had a client with only one match in 4 cities under 850,000. Wow. Yeah. So strained inventory. It looked like the major markets are still doing pretty well. Maybe some of the minor markets are experiencing a little bit of softening in the inventory. So thank you guys for chiming in and telling us what's happening in your neck of the woods. And the reason why I kind of half jokingly and also half seriously brought up the foreclosure thing is because it's happening. Exactly what Susie Orman says is going to happen has happened.
It just took longer than what she said, but she's right. By the way, I'm currently scrolling through her page, and there's not a lot of incendiary.
For her page? Oh, she got roasted last time. Man.
Yeah, there's not a lot of incendiary predictions anymore. It's weird.
Yeah. I don't think she's going to be making any market projections anytime soon. But if she did, and if she predicted that foreclosures would go up 68%, then yeah, there you are. So the foreclosure ban ended. This is from the Florida Realtors. Andy Rose gave us this article, so you guys be sure to give him a follow. If you're in Clubhouse, he's at the top there. Foreclosures are up 68%, but less than pre-pandemic levels. So the foreclosure ban ended, sending numbers higher, 34% quarter to quarter, 68% year over year. But the impact on the market is minimal so far. What? So Adam Data, which we know how some of you feel about Adam Data,
There's just
has
so many.
released it's always our disclosure now, because the last time we shared a story from him, they were like, "Oh man, I don't like Adam Data."
I know we had a bunch of people say they don't like Adam Data.
Yeah, I don't know why. Anyway, it released its Q3 2000 to 2021 U.S. Foreclosure market report, which shows that there were a total of 45,517 U.S. properties with foreclosure filings and default notices, scheduled auctions, or bank repossessions. That's up 34% from the previous quarter and 68% from a year ago. Now, remember, it's up 68% from last year. Dan, do you remember what was happening last year?
Wait, the Red Sox won. So who won the? It was something. I don't remember what it was. What was last year?
There was a foreclosure ban.
Oh yeah, you couldn't. Oh
Right.
yeah. My bad.
Yeah.
I forgot all about
But-
that.
It's up 68% from a year in which there was a ban on it.
There's 0.
Right. Now, if you listen closely to our show, you would know that we said to look for the headlines, home price gain slow, and also foreclosures way up. And we said that the home price gains would slow, but they'd still be gaining. And we said that the foreclosures would be way up because there was no foreclosures last year. So foreclosures started to jump nationwide. They finally started foreclosing on these properties of people that weren't paying the money. These are not all forbearance homes. They're not people that were in forbearance, that refied out of forbearance, that are not getting foreclosed on. It is people that did not pay. Bank possessions increase. Highest foreclosure rates in Nevada, Illinois, and Delaware. Average time to foreclose increased 11% from last year. So there's a foreclosure information. It is up, but this is all to be expected. This is something that we predicted, and we're not even economists. So I don't think this is a huge deal. Am I missing something? Is this a huge deal? Maybe it would put a little bit of relief on housing inventory.
That's what
Maybe
we have been saying, with when they can finally get these foreclosures again, it's just going to help inventory because new construction can't keep up, and new listings aren't coming to the market as quickly as we would like. And then it's also the holidays, and so I think this would help. And you don't want to go through any sort of thought process. It's like, well, we should foreclose on all these homes, but if someone hasn't paid and now they can foreclose and get that inventory out there, I don't see how that could be a bad thing. Now, if you just react to the 68%, oh my God, yeah, sure, it seems pretty horrible that all of a sudden these foreclosures are going to flood the market and Susie Orman's going to be right, but that's not the case.
and she literally that your neighbor would sell for half of its value, and suddenly your home is worth half. That's what she said.
You know what I should have done is opened that specific post, saved the actual link to that post so we could come back to it on the show and just bring it up, because you guys need to see it. And it's from what, June of last year?
Yeah. Was it last year? It wasn't this year. Yeah, so it was last year. Yeah,
no,
yeah.
It was June of last year. She legit
said, don't buy a home until getting a call. She said, don't buy a home until October, November, December of 2021, or October, November, December of 2020, because by that time, home prices would be half of what they currently were, because of foreclosures that would happen due to the pandy, and then people selling their house for half of what it's worth. And if you would have taken her advice, you would pay roughly 30% more for your home at that time, from June to the end of the year.
Yeah. In just that 6 months.
Good.
And then it went up another however much in the last. So if you took her advice, do you follow her anymore? Or are you?
I would be like, I'd send her an invoice for the additional.
Yeah, look, Dusty, congrats, Susie. You just cost your listeners $100,000 based on your poor advice. Woo, way to go. I think that's sarcasm.
We do need to cover what is happening with rates. So let me throw this up there. There has been a brief drop in mortgage rates, caused a sudden surge in refinancing. We've talked about this too in the past. It seems like people have their stuff submitted to their lender, their favorite lender, and they're just like waiting. As soon as it drops, bam, they're locking that in, getting that refi done. The rate drop wasn't all that dramatic when looking at the average 30-year fixed for loans and conforming balances. It went from 3.3% to from 3.31% to 3.3%.
Huge.
Yeah. Gigantic.
I mean, you could save tens of dollars over the next 30 years.
Yeah. There was a 9% jump in refinance applications week to week, and they were 37% lower than the same year 1 week ago.
Not a surprise, right?
Remember last year it was like the new low rates and people were jumping all over it.
Well, dude, remember when they were doing the 15-year mortgages at like 2% or something crazy?
Right. Mortgage applications to purchase a home, which are less sensitive to weekly rate changes, decreased 5% for the week and were 8% lower than the same week a year ago. This after 4 consecutive weeks of gains. Let's see. Here's a quote from Joel Kahn. He said activity is still close to its highest level since March of 2021, which is a positive sign as the year comes to an end. Purchase activity continues to be constrained by the lack of inventory combined with rapid rates of home price appreciation and mortgage rates higher than 2020.
I imagine that these guys that get quoted, weekly, they have to have just quotes they come up with. They copy and paste. They're like, I don't just send them the one on rapid activity growth. Just send them that one. There you go. That's my quote.
Well, I mean, the market's cyclical. So yeah.
I wanted to read the last one, the last quote there from Matthew Graham, COO. He's the coup of Mortgage News Daily. He said, while plenty of uncertainty remains, because there was another quote in, I forget which article, but about the variant, which sounds like a great movie, by the way. While plenty of uncertainty remains, there are more headlines regarding lower severity, quote unquote, of Rona symptoms in the variant cases. Investors have rushed back into the stock market as a result, and bonds have suffered. So I find that interesting. And then will that affect, I don't know if it's the next story, Ray, but I'm going to guess, will that affect cash purchases?
Yeah, that's a pretty good guess. I mean, our producers really wrote this one up well. So, cash purchases has kind of been the go-to for a lot of people that are buying or selling their home. You look for somebody with a loan type you like, and if they don't have a loan type you like, or if there's somebody that's got cash, you're going to go straight to them. But could that change with the additional scrutiny from the Biden administration? This article comes to us from Housing Wire. It says all cash transactions under scrutiny of the Biden administration. They announced Monday that it's looking to expand reporting requirements on all cash real estate transactions. The announcement came via U.S. Treasury Department seeking public comment. So it's still up for comment. If you don't like this deal, you can go comment about it. There are currently only 12 metropolitan areas in the U.S. in which insurance companies are required by law to file reports identifying individuals who made all cash real estate purchases exceeding $300,000 through shell companies. These metros include, it's got a list of them there. Increasing transparency in the real estate sector will curb the ability to corrupt officials and criminals to launder the proceeds to their ill-gotten gains through the U.S. real estate market, like the Clintons. Das, the acting director of the Treasury Financial Crimes Enforcement Network, said in a statement. So interesting. They're trying to curb the people's ability to use real estate basically to launder money. But what does that mean? Put them under additional scrutiny.
And how do you do that? So if I have a bunch of money and I want to buy a laundromat, because that seems like a place to launder money.
That's where the term came from, I think.
Well, that's what it means, right? You physically clean them. Is that what it means?
No, not exactly. But
anyway,
a laundromat is like great place.
Or like a nails place. Like, I don't know how they charge $40 to get your nails done, but somehow, anyway, but I want to buy that. What do I do? Okay, cool. You can buy this, but you're under intense scrutiny now. Well, what does that mean?
Yeah, what does that mean?
Are the feds going to show up and be like, all right, we're looking through your, like, what? Any history that I show you,
where's this money come from? Corrupt politician or drug dealer?
Yeah, well, I mean,
or rich person wanting to launder money.
All I have to do is show that seller that I have. I mean, the money didn't just get dropped into my account. It's been here for 60, 90 days. It's from.
Yeah, I mean, who do you show? Titled insurance? Who's
scrutinizing?
Who's coming in and saying, "Oh, we got to report all this"? I guess it's the title companies. Right. So then does it cause the transaction to pause, or can the transaction go ahead and close and you could sell to the drug dealer or the person laundering the money and you're out free and clear? But the person that's making the purchase is now after close going to be under additional scrutiny. Is this going to add time to close for cash transactions, which can close in like 7 to 10 days with all the title work done?
And by the way, like I have a lot of tattoo artist friends, and they make a lot of money, but it's all cash. It's mostly cash.
Better be
So
reporting.
that's how they buy things. It's not drug dealer. It's legit money. They just do tattoos. They're artists. So
Not the ones Dan knows. He's talking about other ones. Other ones do all cash and don't report. Like every server in the country.
yeah, don't look through my
working at
friends and
Retro.
see who's a tattoo artist and see who I am. But I'm just curious, like, are they going to get increased scrutiny, or is it only like if they own more than 100 properties? Like, what is it?
Julie Moon on a Bender says, I would pay money to a magazine or newspaper that would tell me that there is actually no new news today instead of the stupid, ridiculous clickbait articles and rates and foreclosures.
Same. We are, by the way, we are that magazine. We're the ones telling you, here's the headlines.
Yeah.
And how meaning, but so
Uncle
so this
Sam
is a
gets
good
info from lender and title. So so if you're paying cash, I guess if you're doing a large down payment, you can get it from the lender. If you're paying cash, and maybe it's the lender that got paid off, but it's definitely title. I think title is the one.
But that's
reporting authority
after it closes. Then what? You're going to get a knock on your door a month later and go, "You're under intense scrutiny." Like, thanks. I don't.
That's really, I don't know. Like, what's the practical, like, and who's going to do it? Like, they can't even tell me how much I owe on my taxes. I have to come up with that number, and then
I
they
have
tell
to
me
go
whether I'm
find
right
a
or
guy
wrong.
that can come up with that number and then tell them what I owe, and they're
So
like,
dumb.
"Sounds right."
Why don't they just tell me what I owe and I'll just pay it, and we can avoid all the rigmarole?
Ooh, that's a good word right there.
Sorry. It's just, some things.
The entire government is rigmarole. The entirety of the government is rigmarole, and we want to avoid it all, is what we're saying.
Speaking of rigmarole, let's talk Zillow. That's about as good as I could come up with a transition, but I think it works.
Sure. I think it all works.
So to take you back to where this all began, about a year or two ago, Zillow announced that it was going to start iBuying properties. It means that was going to make a way for people to sell their property through their website. You just log on, you say, "Hey, buy my property." They give you an offer, and everyone said, "Oh, this is going to take the job of real estate agents." So we said, "No, it's going to impact mostly investors."
And remember, they were going to be the Amazon of real estate. You push a button and you sell your house.
Yeah. So they did it for a little while, and supposedly they were pretty good, but
supposedly,
well, they never really
never reported any gains. It was all they lost less money than they thought they were going to.
They lost a whole bunch of money to start, and they're like, "Oh, 'tis to be expected." And they're like, "Oh, we lost less. Oh, we lost less. Oh, we lost less. Oh, we lost a little more." That was the reporting that we were doing. We were like, "Okay, when is this going to be profitable? Does it ever have to be profitable?" We were thinking, "Well, maybe they're just using these properties to market. Like someone would purchase a billboard. If they're purchasing a billboard,
yeah,
a real estate agent purchasing a billboard, you don't like make money directly off the billboard. You get leads from it. You make money off the leads. Maybe that's what they're doing with the properties." Anyway, we had all kinds of theories. Turns out, no, they just weren't making money, and they were actually trying to.
They started overpaying for everything. They started actually giving you what the Zestimate said, and we're like, "Dude, this can't last. You can't do that."
Project Catch Up. We talked about this too. Project Catch Up was a little behind the scenes project for them to catch up with. What's the website? Offers. Open Door. One of the Open Door offers programs, right?
One of the other iBuyers.
Yeah. It probably was Open Door. So we wanted to catch up with Open Door.
Redfin, new, I don't know.
Yeah, new open Redfin door. So they caught up. Turns out they still weren't making money. They did not. I mean, they were doing.
They caught up.
And they had a whole bunch of properties then that they were holding on to, and they said, "Hey guys, we're not gonna do any more iBuying the rest of the year. We're cool with what we have.
Like we got it. Project Catch Up worked. We catched up." And
we're there.
So we're just going to pause it for now till the end of the year.
We don't need any more. A couple of weeks
and
later.
Then, dun.
Actually, we're not going to iBuy ever again.
At all. And we're going to lay off, was it 25%?
Yeah, it was a big portion of the iBuying workforce. And then a couple of weeks later, they were like, "Okay, we have some properties to sell. We're going to sell them." No. At the time, it was only like 5,000 properties. Remember this?
Yeah.
It was only like 5,000 properties. Not a big deal. We're going to offload these 5,000 properties. We're going to lose money on them. It's not huge. Then a week later, it was like, actually, rounding error, 18,000 properties. We're gonna sell 18,000
and
homes.
we're under contract with this many, so the number was
2,000
actually
of
closer to 21,000.
Yeah, there were 2,000 of them they were already under contract with
Yeah.
someone to take them off their hands.
And then remember they canceled how many? 400 or 400?
Then a week or two later, they canceled 400 existing contracts after having said, we're going to continue. We're going to continue with all the ones we had. They then came out and said the infamous words, what, Dan? We can no longer what?
Oh,
you remember? We can no longer support your closing.
Yeah, we can no longer support this closing. Imagine getting that email. You're all,
that's so terrible.
What? Thanks. I don't.
All right. So that brings you up to speed to where we are today. Zillow announced a pause in iBuying mid-October. The company has previously said it had 9,790 homes in its inventory. That was after saying 5,000. And then they were under with another 8,172. So they need to dispose of 18,000. On Thursday, the company said that it made significant progress in winding down Zillow offers. I'm not sharing this article. Sorry. There it is. We're pleased with the progress of our wind down efforts and recognize that it's no longer operating Zillow offers will allow us to have more capital efficient balance sheet and the business moving forward.
That's a more capital. Gosh, I need to start talking like this.
Capital efficient balance sheet. We can no longer support your close, but have a capital efficient balance sheet.
Yeah.
With that, wait.
Sorry, Ray. I want to stop. Yep. So you own a broker. You're the broker. You own a brokerage. Yeah. Have you ever said anything like this, anywhere near this?
No, I mean, I've said I want more capital, but I'm going to totally change the words now. Not only do I want more capital, I need the capital to be efficient.
I need to be more capital efficient.
Yeah, we got to be more capital efficient. So someone's going to come to me and say, Ray, do you think we can buy this new gadget? And I'm going to say, actually, I don't know that would be capital efficient. And if you continue, I can no longer support your position at this company. Which may be what better.
Are you firing me?
To their people. No, maybe that's what better should have said to their people. All right, we'll get.
Are you firing me? No. I just can no longer support your position.
I can no longer support your position. Right. In mid-November, news outlets reported Seattle-based said struck an agreement with 2,000 of them, which we had already talked about. We are oh man, look at that. Y'all should go to Inman's conference. Apparently, we're focused on making homes we are listing for sale available to movers as quickly as possible. As we wind down iBuyer operations, we continue to sell the homes the way we always have, which includes marketing them on open market to sell them to all types of buyers, such as individuals and families, institutional or individual investors and nonprofits. Basically saying anybody will take any offers for these. Any money is good money for these properties. So just to update you on that, an analyst by Bloomberg found that Zillow and iBuying rivals Opendoor and OfferPad have sold more than 20% of their homes to institutional investors so far this year. So institutional investors are making moves for these large portfolios of property. Seems like an easy way to end up with a good deal right now when you have a company that's reeling like this. So 750 million stock buyback is also after the company.
That right there, that number, they're going to kind of slide the other stuff in, but then they're going to go, but we did do a $750 million stock buyback. So, which is going to do what to their stocks?
Well, they're trying to stabilize their stock and keep it from continuing to decrease. Right. So, and what it's supposed to do is show the company has so much confidence in itself that it wants to buy its own stock to basically reclaim some of the ownership because the company knows it's now headed in the right direction.
And then they take that to the shareholders and go, but wait, there's more.
But I mean, it has worked so far today. The stock is up. I mean, if you're a trader.
Well, and remember, this has I don't know if any more have popped up, but there's 2 class action lawsuits on this, right? That have come from this.
Oh, yeah. So
saying that we were sold some snake oil. We were told how strong this was. And then 2 weeks later, oh yeah, it wasn't that strong. Sorry.
Basically, you can't, if you own a public company, you can't say, oh, we love this new thing we're doing. And then a week later say, by the way, that thing was terrible. Shouldn't have done it.
We loved it a week ago. We just don't now. We can no longer support that new thing.
You have to basically show that entire.
But this is also drawn with the sales of these. It's also drawn attention from Congress. Do you want to read through that part, Ray, or you want me to?
No, go ahead. Bring that up.
Now, remember, it was Pretium. Now the article spells it right, and then it spells it as premium later, but it's pretium. So they didn't. They did spell check themselves, but they corrected pretium. Pretium. The sale of pretium prompted scrutiny from U.S. Congress. On November 8th, U.S. Senators Sherrod Brown, Tina Smith, and Jack Reed sent Zillow a letter. Given the shortage of inventory and sales nationwide, it raises "quote unquote" serious concerns about Zillow's plan to dispose of its assets to institutional investors. Brown is the chairman of, and that is Sherrod Brown, is the chairman of the Senate Subcommittee on Housing, Transportation, and Community Development. So they go on to say the trouble is that these types of sales have the ability to put real estate ownership in the hands of corporate-led suburban landlords who have very few meaningful connections to the community. So this is kind of goes back to that. Was it Vacasa, or was it something else that was one town here in LA was like, no, we don't want them, or Picasa.
Yeah.
Like, we don't want that. So
bad press, but I think they pushed through.
It did push through, but there's going to be these local committees, these local hordes.
Wasn't LA trying to get everyone to not do institutional investing? And aren't they? We covered that a week or two ago too. They're investigating ways to prevent institutional investors altogether.
Because there's bans, there's restrictions on the VRBOs and the Airbnbs. Some cities don't even allow it. You can't do transient living, which means less than 30 days. But I'm really curious to see what this happens. If, word of, hey, there's 5 houses in this, area that are going to be sold all to one institutional investor. Well, why don't those 5 listings go out to the public and let us all have our fair shake? But no, they're not. Yeah. So I assume there's going to be more coming at this. Other than the reason I mentioned those 2 class action lawsuits, I think there's going to be more coming, because what is that stat rate? 20% from not just Zillow, but 20% for those 3 different iBuyers are selling to institutional investors. That's a big number.
Yeah. All right. Are you ready to go to better?
Yeah. I haven't watched this, by the way.
You haven't watched it?
No.
Oh man. Okay.
Well, I don't like that app at all, so I don't.
The financial app. I don't even know what they're a lender, right?
I guess so. I don't know if did we cover them? Like, hey, they raised this amount of funding. I don't remember if we've ever brought them up on the
show. Let's see.
Better get a better way to lay off people other than Zoom is what we're learning.
To be honest, I need to find. I think they were looking for a better way to do mortgages. I think that's what they were all about.
Yeah, there you
go. So I haven't confirmed that just off the top of my head here. All right, so let's talk better. And then after this, we're going to talk about the cash out refis. Just real quickly mention that. And then we'll talk about the Bible and if it's hate speech or not. So yes. we got a lot to work through. And we got to do it pretty quick. All right, so here's the rundown on better. Let me make sure I'm getting the right share here. Is that the one? Hang on. Yeah, that's it. All right. And live production. I'm going to try. So adult language warning. I'm going to try to prevent some of the adult language from coming through in this. But Better CEO under fire after Zoom call layoffs go viral on TikTok. So you might be saying, Ray, why are you guys covering this? Well, one, it's sad, but kind of funny in how this all played out. I mean, there's definitely
and it's also real estate.
It's real estate related because this company was supposed to be one that revolutionizes the mortgage industry. Yes, their mortgage industry. They were supposed to revolutionize the mortgage industry by creating new ways for people to apply for the mortgage that was easier and less friction. And they were basically trying to be the Zillow iBuyer of the mortgage industry, right? That's kind of the comparison. Big company, great systems and processes, making it easier.
One click, blah, blah, blah. Yeah.
Yeah. Well, they're not doing so hot. They're under fire after a Zoom call Zoom call layoffs go viral. It's not just like one guy that was laid off and couldn't make it into the office. So they did a Zoom call. No, they put everybody who was going to be laid off on the Zoom call. Oh, but you didn't know it until he goes on.
900, dude. Approximately 900 employees.
So there's a TikTok video that's been seen by 3.5 million times in 3 days, garnering more than 158,000 likes and attracting 16,000 comments. That's not great. This is the second time in my career I'm doing this, and I do not want this, Garg said matter-of-factly in the video. The last time I did it, I cried. This time, I hope to be stronger.
Oh wow, make it about you.
No, he actually did. He actually did say that. It's all right. We'll play a few minutes of it. Can you hear it?
Hi everyone.
This is painful.
Thank you for joining.
It's painful because it's like cringeworthy.
I come to you with not great news. The market has changed.
The market's hang on. Wait. The market has changed. It's like better than ever. All right, sorry.
We have to move with it in order to survive, so that hopefully we can continue to thrive and deliver on a mission. This isn't news that you're going to want to hear. But ultimately, it was my decision.
Somebody needs to remix this and put some music to it or
I want
something.
you to hear it from me. It's been a really, really challenging decision to make.
Okay.
This is
I want you
the
guys
second
to get
time in
to
my
the.
career I'm doing this, and I do not want to do this. The last time I did it,
Maybe he'll
I
be
cried.
stronger.
This time I hope to be
good.
stronger.
Sorry.
But we are laying off about 15% of the company
Beep beep
for a number of reasons.
beep beep.
The market,
Sorry, I get it.
efficiency,
The market and efficiency based on performance and productivity. So wait a minute. This is because the market, efficiencies, performance, and he looks at his notes, and productivity.
He's trying to be stronger, Ray, so he needs to have notes.
This is terrible. Like oh man.
And did he think this wouldn't get recorded?
Well, so here's a good question, right? So there is someone recording this. So obviously they knew something was up. Like how do you, where's the wherewithal to be like, I'm going to record my CEO's comments currently, unless maybe he never got on Zoom. This was his first time and the guy was super excited to hear from the CEO himself.
Yeah, like, hey, we're gonna have great news. Oh,
Great. Yeah. Oh, yeah. That took a turn. All right, let me play a little bit more of it.
This isn't going well, but I'm gonna keep recording.
I'm going to keep
Put
recording.
it on TikTok.
Yeah, and again, I'm going to try to beep over the guy. So in post production, we'll be able to put beeps over it for the chop, but we may have to label this one as explicit. So here we go. It's almost over. I think.
If you're on this call,
you
are part of the unlucky group.
Beep, beep, beep.
That is being laid off.
It's terrible.
Your employment here is terminated.
Oh my god.
Immediately.
So that's how he did it.
Oh my god.
Yeah, that's what the guy said too. If you are on this call, you're terminated.
Oh my god. Yeah.
This is not good.
Dude, and right now in that industry, and lenders could go either start their own thing or go under another, smaller company or a different umbrella and just go have another job. I'm assuming a lot of people are going to be like, dude, wow.
So it's interesting. Like Better works with agents. You can save 1% up to the purchase price. You can lock in savings with them. Basically, I think this is one of those companies, and don't quote me, but I think they take a referral fee from the agent and give back a portion of that referral fee in quote unquote savings if you use one of their Better affiliated agents, right? So I think they're one of those that has an affiliated businesses. They have the Better Settlement Services, so that's the title company, right? Better Cover LLC, Pennsylvania Resident Producer Agency. I don't know what that is. And then the Better Real Estate LLC, DBA, Better Home Services, Better Real Estate. That's the licensed real estate brokerage. So those are their affiliated businesses. And so they use the licensed real estate brokerage to send referrals to real estate agents and then tell consumers you can make back money if you use one of our agents, but they only give them a portion of it and they take a little bit more from the agent. So, and in this type of environment, what's he saying? Well, the market is taking a turn. What are they talking about? Like mortgage applications are only down 5%. That's not a huge turn.
Then you have to
That's
lay off
just kind of normal market activity. Hey, Howard Broadsley. He joins us, says, unbelievable. Matt LaMarche, what a way to go. Dusty, laying off people sucks, but they deserve at least a one-on-one phone call or Zoom. But a lot of these new companies, Dusty, the people aren't even located near the office at all. But would a phone call, like just practically speaking, would a phone call have been better?
Just you could have the PR, your HR reps call. It's better than you get excited about. Oh, the CEO is going to talk to us.
Yeah.
Oh,
this is not good news. At least he started that up front. Dusty Martin said, right, make a phone call. Matt LaMarche with all the puns. There's a better way to do it. He can do better. Surely 900 employees will find something better, maybe in a better market. Yeah, that's mind-boggling. It blows my mind in a couple of different reasons. One is we've been talking about the commission compression of real estate agents and what they're feeling around the country as you have these big feeders, these big giant companies that are getting their real estate license, mortgage license, and settlement licenses in order to take care of the entire transaction, which sounds good. But from what we've seen so far, the customer service doesn't appear to be the same as if you had experts and individuals in each one of those.
Well, and good.
Thanks, Matt. I appreciate it.
So I'm doing some live searching. Oh, cool. Thank you.
Scap says, as an appraiser, better.com is a freaking nightmare to work with. Guess their loan officers couldn't get the values more inflated.
And I
sounds like a George Clooney movie. Howard Broadsley. Yeah, for sure.
So I did some quick searches, and there's, apparently because this is a couple days ago, then he sent a letter out. And I found a few. There's one on TechCrunch here. And it's got the letter. We don't need to go through it. But it says Garg's reputation as a not very nice person goes back to last year when Forbes revealed the contents of an email to employees from Garg. And it said, quote, "Hello, wake up better team. You are too dang slow. You are a bunch of dumb dolphins." This is straight quote. "And dumb dolphins get caught in nets and eaten by sharks. So stop it right now. You are embarrassing me."
What?
That's apparently from an email that he sent to employees.
You're a bunch of dumb dolphins.
You're a bunch. I don't even know how you make that reference. You're a bunch of dumb dolphins because dumb dolphins get caught in nets, I guess. But
from a boss perspective, as a comparison rating, I'm pretty rad.
Yeah, like you would never say that. And so what and then it goes on. So in April 2020, better.com said it was hiring aggressively. So Ray, I do believe we mentioned this. I think we did. As more people were seeking to refinance their homes in the face of historically low mortgage rates. At that time, I had reported, this is whoever wrote the article, for Crunchbase News, that an internal memo to employees from Garg revealed that the mortgage lending startup was looking to hire about 1,000 people in 2020 as a whole, quote, as more and more homeowners come online for their needs. So he's laid off most of those people, of the 900. Wow.
Amanda Dahl with a comment on Clubhouse. She says, and then he ends with good luck and much success. Yeah, she watched it all the way to the end too. Then she says, this is the second time he said he's doing it. So clearly he's killing it as CEO.
He's killing the CEO, and he's just
killing it, quote unquote, like literally killing it as a CEO.
Well, and he's obviously super connected to the reality of quote unquote normal people's lives. Jeez.
Yeah. And Rose said, better watch his back. So punny. Y'all are so funny.
That is insane. Right. Yeah.
All right, so let's get to the next article. I want to mention this one, and I'm going to try to go quickly through this one and the next one. Cash out refis are in high demand as equity levels skyrocket. Cash out refis. That's a lending thing, right? They're in high demand. According to a report published by data vendor Black Knight this week, the third quarter of 2021 saw nearly $250 billion increase in tappable equity, a record. In turn, Black Knight predicts that there will be an influx of cash out refis in the months to come. The aggregate total of $9.4 trillion is up an astonishing 32% from the last time this year and nearly 90% higher than the pre-Great Recession peak in 2006. That was Ben Grabowski. He's the data and analytics president at Black Knight. He goes on to say that works out to nearly $178,000 available in tappable equity to the average homeowner with a mortgage before hitting the maximum combined loan-to-value ratio of 80%. So it goes on. You guys can look this one up. It's also on Housing Wire, but I just wanted to mention that if your
I have a
clients are
question
thinking
about this
doing
one,
some
Ray.
home improvements, it might be a good time to refi. I remember a year and a half ago, one of my clients was like, "Hey, we're thinking about refining. I need to follow up with them now to see if they actually got that done. Because if not, they have all this tappable equity. It's a great time still."
Well, I have a question though. Is this coming, talking about cash out refis? Is this hate speech against regular refis?
No.
Sorry, I'm just trying to transition so we can move on.
It was a terrible transition. It's a protected class.
So cash out refis is a protected. Okay.
No. Cash out refi is not a protected class.
Oh, it's not a protected class. Okay, so it's okay.
All right, so this is
You
super
can speak
uncomfortable.
disparagingly about cash out refis.
Yeah, we're gonna try to be better, as Matt
Okay,
Lamar
Matt,
said.
you're really malarshing it at this point. Stop.
He said, "I wonder what this does to their Better Business Bureau rating." All right,
He's
so
like,
let's talk about,
I have 10 more.
let's talk real briefly about this one. What's going on here? Oh, that's wrong. Hang on. Hang with me. Live. So how I do this is I have two different windows up, and one has all the tabs, and the other one has the one shared tab. And so I just pasted that in the wrong tab. All right, we're there now.
Is the Bible?
And so is the Bible hate speech? And our hate speech provision faces its first big test. So realtor Brandon Hubbard is under fire for pulling his church's support of a food bank during Pride Month. Now, the Missoula Organization of Realtors has to determine if it's religious freedom or hate speech. So in the face of rising racial tensions, it has. They're talking about why the National Association of Realtors said, "Hey, there's no hate speech." It's why they addressed it in November. Montana realtor Brandon Hubbard, who's also a local pastor, could be offering the greatest test yet, as he's locked in a legal battle with the Missoula Organization of Realtors over where free speech ends and hate begins. In June, he pulled his church's support from the food bank due to the organization's decision to include LGBTQ plus Pride Month insert with the free lunches it distributed to local families. The insert went against his beliefs in the Christian and biblical principles he teaches his congregants. So basically what you have, just to boil this down, like I think it's sometimes helpful to detach it to whatever side or party you're on, right?
Yeah.
You have this not-for-profit organization that believes in doing things one way. Okay. You have another not-for-profit organization that they are partnering with currently that wants to insert something that goes against this other not-for-profit organization's belief, right? They would rather just feed the food. Why don't do the insert?
Yeah.
This group says, no, we're going to do the insert. Okay. Well, if you're going to do the insert, we're going to do our own lunch thing.
Separate thing with no insert.
Separate thing, no insert. So they pull the support from an organization that was giving free meals, and instead they do free meals themselves. So this is the letter, I guess, that he sent out to everyone. This is a quote from the letter he sent out to everyone. It says, "Clinton Community Church wants our community to know that we love and support each and every one of you, no matter your background, where you are in life. As a church, we strive to show the love of Jesus in all we do throughout the community while standing up for biblical principles, biblical truths in our beliefs." Where's the other quote? The whole letter is on Inman that you can read it. In the letter, he also announced the launch of the Clinton Community Church Pantry, which served more than 680 free lunches in July and August. However, the pantry's operations came to an abrupt stop when an anonymous Clinton resident filed a discrimination claim with the Missoula MOR. What was it called? Missoula Organization of Realtors.
Yeah.
I don't know. It's interesting. If you read the letter, it doesn't sound real hateful. They're allowing anyone to come and get the food, no matter who you are, where you're from. We
just didn't want the insert. It just didn't align with our beliefs.
Right. And
so
we're
not saying you can't do a thing. We'll still support you. We're just going to do our own.
Yeah.
Is that hateful? Because we still want to give away food. Is that hateful?
The complaint cited National Association of Realtors Code of Ethics, which we talked about last year. And that standard prohibits realtors from using harassing speech, hate speech, epithets, or slurs based on race, color, religion, sex, handicap, familial status, national origin, sexual origin, or gender identity.
Okay, but did they violate any of that by not wanting?
That's the question that they have to answer. And it also says, so it's using harassing speech or hate speech. How is pulling your support from something hate speech or harassing speech as a realtor now?
No, because it doesn't align with our beliefs, whatever your beliefs are. And they even said, no, we support anyone that wants to, whatever your beliefs are and whatever your background, come get some free food if you need it. We are here to help you. We just didn't want the insert.
Now that's why I think this is a terrible test of the rule, because I think it's going to get thrown out on the principle of there's no speech here. It doesn't one organization, they're going to do it themselves. So I think it's a terrible test of this standard. Now here's where this would be a good test. The comments supposedly that the pastor, and the reason why I say supposedly is because there's no evidence of it. Someone just says it is.
Allegedly, then we have to say.
Right. The alleged comments about a certain group of people being an abomination, etc., which were then taken down off social media. Well, okay. But that's
different though.
That's different, and it's not there. So
it's also not there. And it's also, if he says something or like types something, it's what he types. That's one thing. But if he is he just pulling a quote from the Bible? I don't know the Bible, but if he pulling a quote from that, is that hate speech? Because then you're going into a whole thing. So the reason I say so we said this whenever it happened a year ago, that this is a slippery slope. And now,
yes,
this is where we're seeing that. But if they're going to say the Bible is hate speech, okay, so no realtors can follow the Bible?
And now the National Association of Realtors gets to pay legal fees to battle this guy who still wants to give food away.
So I'm going to go back to what I say every single time.
Can we just, oh my goodness.
Can we just work on a new logo, please? Like spend 250 grand on it. I don't care.
I mean, God.
I want to go back to those times. We were so mad about that. It seems so simple.
Conoco, he believes in me. Thanks.
He does. Justin, you're going to get a message from me at some point. Hey, so I'm going to go back to the same thing that I say about all this stuff. So you remember, I'm old as all get out. I'm older than dirt. So I'm actually not that old yet. I'm not old. My dad's older than dirt. I'm not there yet. Norm. Yeah. Norm's here, by the way. I know he's creeping. He's the only lurker that we allow. But if like how it used to be was, if you didn't like how someone or some business handled something in your community, you just didn't shop there or give them your business, or you just kind of went, all right, you just kind of, or like a whole committee would get together and we're going to vote on this, and then they'd vote out, and then it kind of moved on. Now it's this whole big thing where we got to pay lawyers' fees to go after a guy who's trying to give food away. He's trying to give away, like, do a good thing. He just
no longer wants to partner with an organization that he doesn't feel reflects his current views. He doesn't want to partner with that organization anymore. How can you force someone to partner with a charity?
They don't want it. They're both nonprofits.
What are they going to do? Say, no, you actually have to continue to give them money. What?
That's where this would go. That's why I say the opposite of Ray, which I think this is a big deal how they decide on this.
You said you think it's a big deal? I think it's a terrible test. I don't. I mean, it could be. What it's going to do is say, well, you can support whatever organizations you want to support.
But what if they make any missteps at all? Other people are going to go, oh, what? Because remember what we originally said is, this is where realtors are going to get scrutinized for things they post and comment on Facebook. And that's happened a little bit, but
political parties they affiliate with.
Right. Because the orange one hates this or that or whatever. Well, I don't hate that. I just like that guy. I don't know.
You remember what we talked about in specific context of like an atheist that hates religion. Well, now you as a real estate agent who are an atheist, now you hate a protected class.
That's why I don't. Yeah. I'm in a protected class then. Right.
So if you come out against the protected class, No, I don't. I think the religious are in the protected class, not a non-religious.
That's why I post things about music and real estate, and that's it.
Stay away. Stay away from it. My goodness.
Yeah. So, you know, I that's why I say that. Yes, I agree with you, Ray, where it's a horrible test, but if they make any missteps in this, I think things are going to come out of the woodwork.
Oh, it's going to cost them so much money. So much money in legal fees.
Us.
No, I think it would cost the National Association. Well, I guess that is us.
That's us.
It would cost us so much money in legal fees that we could be doing better things with.
So yeah, we could, again, man, let's just go back to the logo thing. Let's just, and I think they were horribly amazing commercials. Let's go back to that, dude. I want more of those. Spend our money on that, please.
Marsh says he'll try better next time. Thanks, bud.
And he wanted to know if we think he can do better.
Yeah, you can definitely do better.
All right. And Malarsh, I'm going to reach out to you too. You're going to get a message later today or tomorrow or something. I don't know.
I wonder what it's about. I don't know.
It's about something better. On that note, on that horrible note of disappointment, Ray.
Where can everyone find you, Dan?
D Ludwig Rocks everywhere. DLUDWIGROCKS. Everything for me is either here on Clubhouse. I'm here once a week, and every now and then I'll chime in on stuff if I find something interesting with the other people I follow. But most of my stuff is on Instagram. Where can they find you, Ray?
Ray Zorback. That's RAYZORBACK. Oh, Dan,
I was trying to make it through.
Almost. We were so close. You can also follow the Real Estate Networking Club. You can follow us on Clubhouse. Any of these moderators or people that pop up during the show, if I give them a green badge, that's because that they've talked on the show, that I know them. Oh, there's Armando. Hey, buddy, I need to give you a badge too. All right, even though we're at the end of the show. The people with the green badge are the people that we trust, that have shared good stuff in the past, that have contributed to the show, and that are usually legit agents. So we'd love it if you'd follow them. I know.
And the Real Estate Networking. Mention that because
Real Estate Networking.
It's up over 30,000 now. 30,000. Yeah.
Wow. Yeah, it's in the top. Yeah, Real Estate Networking. Just hit the little greenhouse at the top in Clubhouse. If you're not on Clubhouse right now, download the app and then search Real Estate Networking. Join that group. There's millions and millions and millions of dollars of referrals that's passed through there all the time. So be as active as you can in those rooms, and you make a lot of money just from contributing to your fellow realtor. Who needs the National Association when you can have an international connection through the Real Estate Networking Club? And don't forget to subscribe, follow the YouTube channel, hit the bell so that you're notified of whenever we put out the chops. Also follow us on Instagram. We're going to be collabing with some clips that are coming up, so we'd appreciate it if you guys would interact and share with those too. So thank you guys for all the comments. Matt, he was relatively quiet in Clubhouse today, but commented out the wazoo on the YouTubes, so we really appreciate that. Thank you guys for stopping by. We will see y'all next time. Bye.